Welcome, everybody. We're just going to give it a few minutes to let everyone join, and then we will get started. People are still rolling in. We'll just give it a couple more seconds. Okay. Hi, everyone. Welcome to today's Charity Village webinar. My name is Luigi Marshall, and I'm the Director of Marketing and Communications with Charity Village. Before we start today's webinar, I'd like to do a few introductions and quickly run through some housekeeping items. For those of you who may be joining Charity Village webinar for the first time, Charity Village is Canada's largest online job board for the nonprofit sector. In addition to our online job board, organizations can also post volunteer positions. So if you're looking for work or to recruit talent in the sector, Charity Village is the place to start. We also have a ton of excellent resources for nonprofit professionals, including online courses, articles, fundraising tools, and free webinars like the one we're presenting today. Before I introduce our speaker for today, I'd just like to let you know, you may have noticed when you joined the webinar today that you were automatically put on mute. Since we have hundreds of participants in today's webinar, it's important for us to minimize the amount of background noise so everyone can clearly hear the presentation. But you can still ask questions and make comments using the question box at the bottom of the Zoom control panel. Look for that at the bottom of your screen. We'll be taking questions at the end of the webinar, so please submit your questions as you think of them, and we'll do our best to get to as many as possible. You can also email your questions to webinars@charityvillage.com. If you happen to encounter any technical issues with the webinar, whether with viewing the presentation or with the audio, please let us know in the question box or by sending us an email. We'll do our best to get any technical difficulties resolved as quickly as possible. But in a worst case scenario, please remember that we are recording today's webinar and we will send you the full recording by email, most likely this afternoon or by tomorrow morning. So if you get called away or disconnected, you'll still be able to view the full presentation. And with that, I'd like to welcome our presenters today, Omar Visram, the co-founder and CEO of Enkel Back Office Solutions, and Christine Kesher, the director of the nonprofit division at Enkel. Welcome.
Excellent. Thank you. And hello, everyone. Welcome to today's webinar. We're really excited to get things going. As a quick introduction, you heard my name is Omar. I am the co-founder and CEO of Enkel. And I started Enkel about 6.5 years ago after an extensive career in accounting, where I saw that small businesses and not-for-profit organizations really struggle with their accounting back office. With me today is Christine Kesher, our head of the NPO division here at Enkel. Christine has extensive experience in both accounting for not-for-profit organizations and as well as on the administration and operations side of not-for-profit organizations. A little bit about Enkel. We are a Vancouver-based company. Our team is located across the country. We've worked with over 100 not-for-profit organizations and charities across Canada. We provide outsourced bookkeeping and accounting services in these 5 categories. So bookkeeping, payroll, accounts payable, accounts receivable, and what we call controllership services. A quick agenda for today. We're going to start by talking about the importance of a budget for financial sustainability, budgeting roles and responsibilities, how NPO budgets differ from for-profit organizations, the master budget versus the program budget, how funding agreements connect with the budget, allocating administrative costs in your budget, when should you create a budget, what happens when you go over budget, steps for the annual budgeting process, and best practices for creating a budget, We're also going to have an opportunity for questions and answers at the end, so please do send us those questions. I'll now hand it over to Christine to take us through the content for today.
Thanks, Omar, and welcome everyone. I am so excited to be here and see how many people we had sign up for this webinar. It really does show what a hot topic budgeting is. And I think the most common questions that I've seen are, how can we be optimistic and realistic at the same time? How can we be good stewards of the money that's entrusted to us without underspending and then having funders question whether we need the money or not? These are just a couple of things that we're going to be covering in today's webinar. And hopefully by the end, you'll be better able to handle your own budget and have the tools in place to be able to do that effectively. Let's talk about the importance of a budget for financial sustainability. It's really important in the budget process that you have transparency to your stakeholders. In a nonprofit or charity, that's your board of directors, your funders. And it's really important for ongoing planning. You need to manage your surpluses, manage your deficits, and you want to keep your budget balanced. There's a really sweet spot between having too much of a surplus or deficit, and you want to stay right in the middle where you want to keep your budget balanced. Now we're going to talk about budgeting roles and responsibility. Who does what when it comes to your budget? The people that create your budget are typically your executive director, along with your finance team. But there are also contributors to the budget, which is really important. So your board members can contribute, program managers can contribute. So for a charity, for example, that has restricted funds and many programs they're running, it can be really important to get that feedback from the people that are actually delivering those programs. How much money do we need to effectively reach the people that we're reaching, for example? We might also ask our funders and donors to contribute to the budget. And who approves the budget? You have to have your budget go before your board. And typically, when I was auditing, auditors will look in your board minutes to ensure that your board has approved your budget. And then further to that, as an auditor, they will make sure that you have stayed to budget. And if there's any significant variances to your budget, these might come up in questions. So your board is also really integral in managing and approving your budget. Let's talk about not-for-profit versus for-profit. There's some really important differences here. So in the not-for-profit world, we are talking most about financial sustainability versus making money. That bottom line, that net income, that dividend and shareholder returns are often the focus in the for-profit world. The for-profit world is looking for profitability. They're more concerned with the bottom line, net income focused, raising sales and how do we make as much money as we can. Whereas in a nonprofit and when you're budgeting, you're really looking for sustainability, not just for the coming year, but for the years to come. You have a mission and a strategy to deliver programs and services that hopefully have several years planned for in your budget and forecasting. You have an accountability to board and funders and donors, which makes a big difference. And you're concerned with appropriate utilization and allocation of resources based on your mission. You also will have typically multiple programs and funds that are restricted, which means how you spend your money might not entirely be up to you. Now, there is the master budget, and then there's program budgets, event budgets. So let's break those down. Your master budget is the budget that holds all of the budgets together. There are different methods to budgeting. There's deferral versus restricted fund methods. And there are internally and externally restricted budgets that all flow into that master budget. Externally restricted budgets and funds are typically funds that are restricted by your donor or your funder. This is really common in the NPO world. So if your funder is giving you $500,000 for a specific project, then they typically really have a strong say in how you spend that money. So we consider that externally restricted. You can't just all of a sudden buy new office furniture with that money if it's not in that funding agreement. So it's really important that that is captured in your budget and that your budget aligns with that funding agreement. Organizations often run large events. They may want a separate budget for that event. So if you have a huge golf tournament that brings in great fundraising revenue, you may want to create a separate budget for that as well. Now, as we delve a little bit deeper into funding agreements, your funding agreements typically have a budget attached. In fact, when you apply for that funding, you typically provide the budget and say, we would like this money, please, and this is how we'd like to spend it. That's typically how that process works. Then the funder will review, and if it's approved, you will get those funds with a specific budget attached. And it designates how the funds received are to be dispersed, including a time frame. And even that time frame is really important when you're budgeting. It's important to align your budget time frame with your funding time frame. You must be accountable to funders to maintain the agreement. The budget needs to agree to the funding agreement. And often when this program is over, the funding has been spent, you will owe a funding report to your funder to prove that you spent the money as designated. This is a pretty hot topic that comes up quite often as we help our clients with their budgets. How do we allocate administrative costs? The funders typically set a certain percentage of funding for admin costs. Costs need to relate to the grant and how it's spent. And again, this just goes back to following your agreement. Agencies take the cost into their budget. They determine which operating expenses should be applied to the different programs. So what we typically see is your admin costs are spread throughout all of your programs, a certain percentage. This is a really big question that comes up often is, when should we be creating our budget? Generally, 3 months prior to the beginning of your next year. Large organizations may need to involve more people, and this can start even up to 6 months before. But you want to make sure that your budget is finalized and approved by your board before your fiscal year begins, so that on the first day of your fiscal, you are armed with all of the tools that you need to stay financially sustainable and in agreement with your funders. So what happens when we go over budget? And this can happen often, and we're talking about in your expenses portion of your budget. You need to track your actual to budget on a monthly basis to avoid surprises. So what we're talking about here is best practice. You want to be able to report to your board on a regular basis where you are versus budget. Make sure your budget is in QuickBooks or another accounting program on a regular basis so that it's easily able to be compared. And know your policies. Do you have policies? What are the provisions for going over budget? So typically, an agency might have a policy that says if we have to go over a certain threshold, it needs to go back to the board to approve a revised budget. But again, what's really important here is that you have that plan in place with those policies in place so that you're proactive and not reactive. Overages generally require board approval. And what's What's another way to be proactive is budget for unexpected events. What about repairs, maintenance, legal costs that might come up? It's always really good to be realistic in your budgeting that these things might come up. And if they don't, great. So here are the steps for creating your annual budget. The first thing, and we consider it the source, is your funding agreements. You always go back to your funding agreements. Then you review the last couple of years of financials for trends. I've seen 2 years, I've seen 3 years. You do want to look at the consistency and the trends there. And then you want to consider any changes to revenue or expenditures for the upcoming fiscal year. So let's say you're going to be running a new program or you're anticipating a new purchase. These are things that you need to think about and log as you're looking at the budgeting process. Then you want to gather that important integral feedback from the people that are actually delivering these programs. Your program managers, other key stakeholders, they really are the experts in what it takes to deliver those programs. Then you want to create those program budgets and the master budget. So typically you have your master budget, which aligns with your funding agreements and any fundraising and donations that you expect to bring in that year. And then you disperse to the programs. Then you send a draft budget to the board for approval. What are the best practices for creating your budget? And we've touched on some of these already. Create your budget in the same format as your chart of accounts in your bookkeeping system. This is a big one. Sometimes we get budgets from our clients that don't align with their accounting data, and we will work with them to either update their accounting system so that it aligns with their budget, or we align the budget with their accounting system. It's really important in watching those revenues and expenditures flow through in the year. And it allows for easy budget to actual tracking. Focus on the organizational sustainability versus a surplus. Okay, when you are focused on budgeting for a surplus, it may send a message to your funders that you may not need the extra funding. Your focus should be on organizational sustainability. Ensure that the budget is approved by the board before the fiscal year. Be realistic and conservative with your budget. And that's what I was talking to in the beginning, is realistic and optimistic, and there's a fine line in between. We want to stay there. And you want to make sure that you are aligned with your strategic plan that is also board approved. And that is where we wrap up the webinar. We're going to open up right now for questions. So please use the Q&A, and Omar and I will do our best to navigate your questions during this time. Thank you so much for attending.
Excellent. Thank you, everyone. All right. A lot of questions here. Christine, do you want to maybe kick off one of the first questions?
I'm looking at the questions. One of them was, how far in advance should we budget? So we did talk about that. 3 months is typically the soft spot, but you can go as far in advance as you want. What's important there to remember is that your budget is approved by the board before your fiscal. Would you happen to have a template that you can share to be used for an overall fundraising plan for agencies? Omar?
On that one, what we have found, and Christine, you and I have seen this a number of times, the way that we prepare budgets and the customization for each organization, I wouldn't say that we have a template that, you know, is sort of a one size fits all. This is something that you really want to work on with your finance team, or that we could potentially help you design. But unfortunately, we don't have any templates out there to share.
There's a good question here. We're looking at a deficit budget for the upcoming year. We're applying for quite a bit of funding for the next fiscal, but we won't know if we receive it. Would it be better to show and have the board approve a budget that we are aiming for, smaller deficit, or one that we are seeing right now, larger deficit? I would encourage you to be realistic with the funding that you propose that you will actually bring in and take that to the board. Obviously, it's always better to budget for a smaller deficit, but the board needs transparency and a realistic look into your financial year. And if the realities are that you're going to have a larger deficit, then that's the budget that you need to present.
I like this next question here. It's a long one. We have two directors on the board with different views on the budgeting schedule. One wants to approve a budget before the new fiscal year starts so that spending policies and revenue targets are established well in advance, while the other director wants to wait 6 months into the next fiscal year so that there's more certainty that the budget is achievable. What would you suggest? So I'll start this one off, and then maybe Christine, you can shed a little bit of light here. It is best practice to have the budget in place before the next fiscal year. I can understand the objective here, but really you want to undertake an extensive budgeting process before the fiscal year begins. And Christine, you've seen this in real life before. You've been a part of this sort of thing, so maybe you can add some color to that.
I think another suggestion, Omar, that I would make in this case, and I think both, just like you're alluding to, I think both directors are right in their views. However, best practice is that the budget be approved before the fiscal. So what I would do is, whether you put it into your financial policies or not, I probably would have a financial policy that has us revisit our budget at the 6-month mark to see if it needs to be revised and then reapproved by the board. So in this case, listening to your directors that have both valid points, but it's important to have the master budget in place before the fiscal, because what ends up happening is there's no basis to how much we can spend for any program for 6 whole months. And so it's important to have that accountability. I think we really need to embrace budgets as a level of accountability for often money that's not ours. It's been entrusted to us. Right. So it's really important that we are accountable even in those first 6 months. But that director is right. Things can change. And so I would revisit every 6 months to see if the budget needs to be revised and reapproved. That's a great question.
Great insight. Thanks, Christine. Another one here that I also like, maybe I just like all of these questions. We use an annual indirect allocation across our programs. Do funders consider admin costs to be the same as these indirect organizational costs? So Christine, we talked about allocating administrative costs. This seems to have been a topic that we've hit on with a number of our clients this year. What are your thoughts? Maybe we can talk just generally about allocation of administrative expenses a little bit more.
What I'm seeing more and more in funding agreements is that your funders will be quite specific in what you can allocate those costs to and what you can't. So historically, it was a bit gray, but I'm finding that now they're really specific. You can use it for a portion of, let's say, the ED salary. You can use it for a portion of office expenses. Typically, what these costs relate to is the administrative costs in delivering the funding. So filling out the application, managing the program, filling out the funding agreement. And so what you will see is that your funder will typically give you that really clear picture of where you can allocate. And what we do see it is there is a percentage typically allocated across the board, like this person is saying. Just trying to go through some questions here. There's so many. Someone asked about COVID funding, and I'm trying to find that question because they're all kind of rolling by. But I think the question encompassed, what do we do with those type of years where COVID comes up, and how do we start to budget now? And that's a great question. Imagine all of the people that budgeted for a great year, and then COVID hit. And how do we, and some people are a little bit shy now to budget because they don't know what's going to happen. Or on the flip side, they received COVID funding that they didn't have before. And sort of how do we budget now that we're not going to have that funding? The COVID funding typically was used to alleviate the drop in revenues that nonprofits were seeing. And so as nonprofits get back on their feet, this funding is going to start decreasing. But Omar, do you have insight on this yourself?
Well, I mean, we're already seeing the funding decrease quite a bit, right? Now, and we saw this a lot at the beginning of COVID, to your point, Christine, where not-for-profits had budgeted for all of these events, for instance, and now these events are not happening. So now what, right? And there's potentially a mismatch, right? The COVID funding may have come in later than the actual decrease in revenues and expenses. And this actually ties in very closely to another question here that says, if there are major changes in revenues or expenses throughout the year, do you recommend recasting the budget and having it reapproved by the board? And to an extent, I think the answer here is, it can differ for different organizations. Transparency with the board and alignment with the board, going back to the drawing board with the board, and really making sure that it's clear as to what is changing. And these meetings, these updates may have to occur more frequently in a situation, where there's a lot of uncertainty, where there is something like a pandemic. Christine, I don't know if you have anything else to add to that.
I think this goes back to the financial policies of the agency. Yeah. And I think there has to be really concise policies about what happens when we go off budget. So it shouldn't just be left up in the air. Again, the budget is approved by the board as it is. So if we're overspending, for example, that would come up in an audit process. Why did we spend 30% more on this line than what the budget, the approved budget from the board? So at that point, it would be better to have a revised budget that the board has approved to show that transparency to the auditor and your stakeholders.
Great. There's another one here that is actually quite similar to a conversation that I was having with a client the other day. It's right now our fiscal year end comes 1 month after our largest event of the calendar year. It makes it really difficult to generate a budget in time for the new fiscal without having data from the current year. Would you suggest any ways to try and start budgeting earlier, or would it make sense to look into trying to move when our fiscal year end is? And any suggestions about best practices for doing that? The conversation that I was having with this client was around moving the year end to better align with what the funders year end was, the primary funders year end was. So slightly different context, but yes, there are times when it can be appropriate to change the year end. This case is, I guess, a little bit different. It's, I guess, administratively challenging for the organization, just given the timing of the event. And so I think in this situation, there definitely could be an argument for revising the year-end date of the organization. I don't have any direct experience with changing the year-end of a not-for-profit. Christine, do you?
I do. You would have to apply to CRA to have that changed, and then your accountant would create a stub period for you. So let's say your your year end right now is March and you want to change it to June, you'd have financials that go from April till June. That would be a stub period of your financials. And then July 1st would start your new fiscal. So it is a little bit of a legal process, but one that might be worth it in your case if you're finding that it's really hampering your efforts to provide an efficient budget. I'm seeing a couple of questions here that are the same or similar. So I'm going to touch on this. What if we don't know what our income is for the next fiscal? One person says, you know, for example, you won't know the results of a grant application. Another person said, what if we don't receive confirmation from our funder? Same thing. Okay, and this is pretty common. So as we're planning, typically, if you look at fall, for example, which is what we're going into now, and a lot of nonprofits have a March year end. So in fall, they're applying for grant applications. And then by the end of fall, they're looking at doing their budget. They don't know the outcome. What I would suggest, and one of the people that ask this question say, you know, should we look at last year? So I would look at the probability of receiving that funding. When I used to apply for funding, there was funding that was sort of a given where we received it all of the time. We just had to reapply every 3 years as sort of a technicality. Or just as part of the process. Then there's other funding that's new funding that you're applying for. And I think you need to weigh sort of what is the probability and then be realistic. I would absolutely look at your past years and then be sort of realistically optimistic about receiving that funding. What you can do is budget the expenses to go along with the funds. So really the net won't change, if that makes sense. So let's say I'm applying for $80,000 worth of funding to run ABC program. Then the way that would look on my budget would be ABC program funding, $80,000, ABC program related expenses, $80,000. So you are welcome to budget what you've applied for. And typically you are budgeting to spend the money because that's what our funders want to see.
Great. Here's another one, a little bit of a different direction. Can you comment on NPOs that don't have donors or funders and the only income is fee for service? This is in the starting phase. So I assume this question is in the context of budgeting. And ultimately, you know, same principles apply in my mind. When you're budgeting, you have to think about the seasonality, cyclicality of the organization. You know, when do you think you will be receiving, you know, the most revenue? When do you think you'll have your slowest periods? In this case, you know, how many, you know, contracts are you potentially expecting? So it's perhaps a slightly different set of inputs, but you want to undertake the same process for this organization. Christine, anything to add there?
No, I think that's a good point, Omar. I think that's right. We have another question here, which I think is a really good question and one that I experienced as a former executive director of a charity. It's saying, if our expenses are projecting a deficit, our ED tends to just plug in the amount of fundraising revenue coming in to balance the budget. So what this person is saying is the agency is expecting a deficit, let's say of $20,000. So then the executive director says, we're just going to put in $20,000 extra dollars of fundraising, and then we balance our budget, which I'm going to answer another question that I saw, which is, what is a balanced budget? Balanced budget just means that your net surplus or deficit is zero. That's what a balanced budget is. You're not budgeting to make a surplus or lose money. It's balanced to zero.
Yeah.
So if in this case, your executive director is seeing that there's a deficit, the way that I saw my role as an executive director was that I need to find the money. So I would do it in donations or fundraising, and then I would ensure that that money came in. So that was part of my role as an executive director. And as long as your executive director does plan to bring in that extra money, I think that's a good plan. If there's some anticipated spending coming up, let's say we're saying we're having our salaries looked at and we're going to do salary increases this year, or we're going to do some training. There were times when I would bring to the board a plan to provide extra training for our staff. And so with that came a plan of how I was going to find that money. Either I was going to get extra funding or try to get it through private donations or a fundraising initiative. And so that in itself is a good plan as long as it's followed through.
Yeah, I guess my concern with this question is the concept of plugging. If you really don't believe that those, that fundraising is achievable or attainable, I mean, you definitely shouldn't plug it. The other thing to consider is there may be years where there is a planned deficit, right? Of course, getting to zero is, generally seen as the ideal situation, because that means that the organization will be able to sustain itself over the long term. But there may be years, it could be that there's an extra event that is going to take place. There may be good reason, and it may still be acceptable by the board to run a deficit for a year. So you really want to consider all of the variables at play. I'd say there is no hard and fast rule. It really does come down to what makes sense for your organization at the time.
There's another question here, maybe a simple question: how detailed should your budget be? Again, it should align with the lines on your financials in your accounting program. So if you have, let's say, QuickBooks Online, and you have certain revenue lines and expenditure lines, your budget should align. So it should be as detailed as your financial data.
Yeah, I couldn't agree more. Oftentimes we run into this with new clients coming in where they have a budget that has been prepared sort of outside of considering the chart of accounts. And really it becomes quite hard and a huge Excel manipulation operation to compute budget versus actuals. So if you just go with let's budget at the financial statement level, getting those budget versus actual reports, a simple press of a button out of QuickBooks is quite easy to do.
Another question I see here is, if we budget for unforeseeables but don't end up spending them, how should this money be reallocated? And that's a great question. We see organizations that start up contingency funds, so those rainy day funds. And I would consider, if you've put money aside for a rainy day, that you would then transfer that money into your contingency fund at the end of the year, that unspent rainy day money, and that you would start a fund for that. And every year, so I've seen agencies that have a certain percentage of money or a certain lump sum that they put into a contingency fund every year. And then that is where they pull from in these sort of unforeseeable circumstances.
This next question here is another good one. What is the percentage you recommend for emergency funds like legal or facility repairs? So talking about legal, I'd say that one is completely different for every organization, and it really depends on your legal exposure. So for that, I would speak to legal counsel and make your decision accordingly. Facility repairs, this is interesting, and a lot of stratas, for instance, I sit on a strata, the strata for the place where I live, and what stratas do is they have these depreciation reports done. Depending on the age of your facility, you may want to consider having a depreciation report done. That will give you really good clarity as to what the future looks like in terms of expected repairs. And then you can go about budgeting that way.
I see a question here that says we use books and our past bookkeepers set up our funds as classes. What is the best practice for tracking funds for a small nonprofit? That's a great question. And we do the same for our clients as well. We use QuickBooks Online and we track programs through classes. It's a great tool. QuickBooks Online also has locations. So there are some more complex NPOs and charities that have locations and classes, and you can also utilize both of those at the same time. But that is best practice. So your former bookkeeper did a great job in setting you up.
Yeah. Next one here is any suggestions for a small NPO without a finance team? That is a really great question. Of course, you have limited resources. What do you do? Where can you get sort of the best bang for your buck? My suggestion would be to make sure that you find a bookkeeper who knows not-for-profit organizations. The reason that we set up the NPO division here at Ankle is because we recognize that bookkeeping and accounting for NPOs is very, very different. So you want to make sure that you have a partner that can help you manage your bookkeeping well. And this is really important for even the smallest of not-for-profit organizations, I would say.
I agree. I would suggest outsourcing if you don't have someone internally, and have someone that's really focused on NPO knowledge. It is a completely different budget process for NPO than for profit.
Yeah.
We've got some questions that have already been answered.
There's one here about, it says, how do you bring financial literacy into the organization to the management team? There are, a number of different ways that you can do this. Ideally, if you can have somebody, and it depends on the size of the organization, of course, but if you have somebody on the board with a finance background, that can be invaluable for the organization to really, share with the rest of the board sort of best practices, risks, potential financial risks. It is very hard to run the organization without somebody working in the organization or on a contractual basis on the finance side, or not having a treasurer. If you don't have anybody in the organization that has finance background or finance experience, it can be quite challenging.
I see here that we're being asked, do we help in budgeting for nonprofits for specific programs to apply for grants? Yes, we do. We do that. And then another question on QBO. Can we comment on the merits of each grant having its own class and program? So we've done that already. It's great that a lot of people are asking the same questions, and that's why I really enjoy these webinars, because I think there are a lot of people out there that really struggle in this exact same areas. Let's just see here.
Yeah, we probably have time for, I'd say, one more question. Christine, do you want to pick your favorite one here?
Yeah, I have one that I think is a really common question. So I apologize to anyone whose questions have gone unanswered. We are available through email as well. But the question here is, what's a good method of forecasting? I think this is a really hot topic. Is forecasting necessary for small nonprofits in addition to the budget? The difference between forecasting to me and budgeting is what's actually happening versus what we think is going to happen. So again, a budget is prepared in advance of the year. So let's say we do the budget by February for a year that's starting in April, we've sort of anticipated. Then as we're sort of going along in our fiscal year, it's now December and we have 3 months left. And we want to know sort of how much money do we have left to spend? What are we anticipating? Now we're really in the know. Now we really know if COVID has come and gone, or people have come and gone? Is there a change in wage allocations and all sorts? And we really have a better picture. So then we can forecast throughout the year based on the current knowledge that we have to close off the year. So let's say you're looking at a 6-month actual versus budget. You can then forecast ahead based on more knowledge to say, okay, I know we budgeted this much for this line, but realistically, we're not going to spend that much. And so we can actually move that money elsewhere. Or I know we said we were going to bring in this many donations, but I actually know that, this person's going to give us $50,000 next month. So then we can forecast that. So think of your forecast as more of an in the know process as you're going throughout the year. And I think it's really important, not just for a small nonprofit, for every size nonprofit, as you're reporting to your board so that you can close off your year or continue your year in financial sustainability.
That's great. So I have one final message here. The questions, we've been overwhelmed with the number of great questions. If you want to receive the answers to these questions, please type opt in for follow-up in the chat, and we will be releasing responses to those questions. So please go ahead again and indicate opt in for follow-up in the chat. Thank you very much, everyone. It's been great being with you here today and sharing this webinar today.
Thank you so much, Omar and Christine, for a great presentation. There was definitely a lot of interest in the topic. We had a lot of attendees, a lot of questions. I just got word that there's a bit of a power outage across Toronto. So who knows, there might have been some people that might not have even been able to attend, but we still had a lot of interest in the topic. Just want to remind everyone that you'll receive a follow-up email later today with a link to the webinar recording. And please feel free to share this link with your colleagues. The email will also include a survey link that you can fill out with your feedback on today's webinar. We definitely want to get that feedback, so please fill out the survey. On behalf of Charity Village and Enkel, thank you so much for joining us today, and I wish you all a wonderful rest of your day.